Bitcoin fell below $63,000 early during the U.S. session Friday amid a broader crypto sell-off. It will take some time until Bitcoin recovers to $73,000, Galaxy CEO Mike Novogratz said at the Bitcoin Investor Day conference. ETF inflows will return once GBTC selling is completed due to favorable macro conditions, Coinbase analyst said. Volatility in crypto markets continued Friday, with Bitcoin BTC tumbling below $63,000 at one point from the $67,000 area just hours earlier. A modest rebound since has taken the price back to the current 6,400, down 3.7% over the past 24 hours. The sell-off rippled through the market, with the broad CoinDesk 20 index was lower by 4.4% over the same time frame. Led by Layer 1 network, Solana's token SOL declining more than 10% at one point. It's been more than a week when BTC turned sharply lower from its fresh all-time high price. Over $73,000 in crypto assets entered a corrective period. While Wednesday's steep 10% rally on the back of a dovish Federal Reserve promised a quick recovery, the price action since suggests otherwise. It will take some time before we take out that $73,000 again, said Mike Novogratz, CEO of digital asset investment company Galaxy Digital, during a panel discussion at Bitcoin Investor Day in New York Friday morning. The weak price action comes as U.S. listed spot Bitcoin ETFs have suffered what's now 4 consecutive days of net negative flows. To be sure, nearly all the funds continue to see inflows, but each day this week, they've not been nearly enough to offset massive outflows from the Grayscale Bitcoin Trust GBTC. On Thursday, GBTC saw $359 million in outflows, leading to $94 million in outflows for the entire fund group. Fidelity's Wise Origin Bitcoin Fund FTC garnered the lowest daily inflow in its history, data compiled by BitMEX research shows. So far through the week, the spot ETFs have recorded over $830 million outflows and are on track to endure their second negative week since late January, when BTC corrected to 3,900. Analysts at Coinbase Institutional noted that the increased GBTC selling is potentially in part due to Genesis selling shares as part of its bankruptcy process. Once the sales are completed, the report said, inflows to ETFs could pick up again, amid favorable macro conditions and favorable central bank policy.